group. How do you think about tech as a driver relative to the rest of the market?
I think a good way to characterize that is looking at NVIDIA and its contribution to the overall market. So if we look at NVIDIA year to date, it's 25% of the S&P's year to date return. It's about 25% of the index volatility. And these companies have gotten so large that on earnings events, or we saw Jensen Huang talking at the GS Tech Conference, how there's insatiable demand for H100s. You're getting these swings in market cap on the order of 200 to 400 billion. So in terms of the dispersion of the index, which is essentially the inverse of correlation, it can account for 70 to 80% of the dispersion in the index. And that's part of the reason that we've seen the correlation on the S&P get quite low. The other interesting vector, I think, to consider is generative AI and the LLMs, it's not software. So the hyperscaling business models were really from software where the marginal costs go to zero. The reality, let's exclude NVIDIA for now, but if we look at the tech incumbents, they have to actually increase their CapEx significantly to build these compute clusters. And the clusters are used to not only train the models, but to do inference, and it's very costly, right? So we saw that Elon Musk just built a cluster he called a Colossus. It's based in Memphis. That's about 100,000 H100s. And the cost of a cluster like that is on the order of the single-digit billions, and the electricity consumption is probably roughly that of a small city, right? So the reality is that the existing incumbents have to build out this technology because they can't risk falling behind their competitors. And I believe Sequoia did a study in 2023. They found that about 50 billion was spent on NVIDIA chips, and collectively the industry generated about $3 billion of revenue. So what that means is we haven't found the killer use case just yet. And the market's going to start to be more discerning in terms of path to profitability, scale. They're going to focus on CapEx and projections for CapEx. Now, obviously, we had Google overnight, and they have a cloud business that did very well, so they can subsidize these new technologies and business models. But it'll be interesting to see, for NVIDIA in the M7, we had Tesla, obviously, it's a different animal, but it'll be interesting to see what the CapEx projections are for these companies, and if they miss, that could lead to a negative reaction in those stocks.
How would you broadly, Christian, characterize valuations for this group at these levels?
Well, okay, so if we focus on something like NVIDIA, right, so it is a quasi-monopoly, has roughly, I think, an 85% margin. It's the world's most valuable company now, so it's displaced Microsoft. I haven't actually checked today, but it's trading on 44 times forward earnings, I believe. So that's pretty rich, relative to averages for equity valuations in the U.S. So it'll be very interesting to see whether some of these new investments actually pay off for these firms. We haven't seen it just yet. Now, to be clear about this technology is extremely disruptive. So even at our firm, we're a systematic manager. We apply a scientific process to markets. We're using a lot of these technologies, and we're finding many novel use cases for this type of technology. So it's clear that it's going to be a big deal, but maybe the market's re-rated these multiples a little too aggressively.
The largest early beneficiary of the artificial intelligence AI explosion might be NVIDIA. The IT giant is the go-to business for anyone starting an AI program because it supplies the most powerful CPU in the world in addition to a full range of AI goods and services. And in terms of profitability and share price performance, this has yielded significant outcomes. Over the last 5 years, the chip designer's stock has increased 2,600%, and this year it is expected to rise 183%. Earnings have shot off at this point. Sales to AI clients account for the majority of NVIDIA's revenue, which increased by 87% in the most recent quarter. The company has consistently posted triple-digit growth in both revenue and profit. During the first and second quarters of this year, NVIDIA's data center sales totaled $48.9 billion, which is higher than the $14.6 billion it made during the same period last year. This sounds great, but AI will help NVIDIA in more ways than just data center sales in the years to come. Let's look at another, quite distinct, way AI will boost this AI behemoth's profits. First, a brief overview of NVIDIA's current trajectory and future plans. Because of the superior performance of its graphics processing units, GPUs. The company has an 80% market share in AI chips. A few years ago, these potent processors were mostly used in the gaming business, but their capacity to handle many jobs concurrently allowed them to expand into other fields, including artificial intelligence. Sales of NVIDIA's GPUs and other goods also skyrocketed as a result of the AI boom. The company's most recent quarter's total sales of $30 billion exceeded its yearly revenue as recently as the fiscal year 2023. The expansion of the overall AI market and NVIDIA's emphasis on innovation give cause for optimism that this trend will continue. The $200 billion AI business today is expected to grow to $1 trillion by the end of the decade, according to analysts. As a major provider of necessary and effective AI goods and services, NVIDIA stands to gain if this occurs. Additionally, NVIDIA promises to upgrade its GPUs every year, which should help it stay ahead of the competition. Let's now examine the second way AI will boost NVIDIA's profits. This is accomplished by implementing AI throughout the entire organization. Therefore, NVIDIA is not just a producer of AI. Like its clients, it also uses AI. Long-term cost reduction, process simplification, and increased efficiency should result from this for NVIDIA. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now, let's dive into today's video.
That doesn't tell the story. I don't know, Jason Snipe, what does. You tell me, because you own NVIDIA and you own Qualcomm. You don't own AMD.
Right.
That's not a very compelling story that you need to. I don't necessarily think.
At all, Scott. I mean, obviously the price action tells a story without a doubt. And I think, it was clearly a light guide. It was a messy quarter. I mean, beat on the top and bottom, whatever. But the guidance wasn't great. And I think when you go back to ASML, and their earnings, which were messy as well, and then you saw what happened with Taiwan Semi, which I know is Weiss's stock, which was blowout. It just goes to show you that there are a few companies that are really, really winning here. And NVIDIA, like we always say, the Beltway and the interstate rides all the way through NVIDIA. And I think that's why a lot of folks own it.
Weiss?
I mean, let's call this for what it is, okay? You've got a stock that came into the quarter at 80 times trailing PE, which is almost a third higher than what NVIDIA was. They don't have the same growth rate. They're still more expensive than NVIDIA today, and they're more expensive next year. So what were people thinking? This is purely a momentum trade. I don't care how great a CEO Lisa Su is. I have no reason to believe she's not. I do respect her and like her, and this isn't her fault. Now, her fault may be catching the GPU wave a little late, right? But CPUs are still important. But the point is, it was asinine to own this stock at that valuation when you've got NVIDIA selling at a lower valuation. They're both overpriced, and I own NVIDIA. But I don't know what went through people's minds, and we'll talk about maybe a healthcare company similarly positioned like this. It still makes no sense.
According to a Fierce Network article, NVIDIA's CEO, Jensen Huang, stated at the Gartner IT Symposium that the company is already utilizing AI in the fields of supply chain management and chip design. Huang went on to say that the company would eventually employ 50,000 people and have over 100 million ag assistants. NVIDIA now employs around 30,000 people, so the firm does rely on expanding its human talent base. However, the rise in AI assistants should make the workforce as a whole far more productive and cost-effective than one that relies only on humans. This is fantastic news for NVIDIA's gross margin, which has already surpassed 70% in the early days of AI use. For the third quarter and the entire year, NVIDIA wants to publish a gross margin in the middle of 70%. In the long run, NVIDIA should be able to maintain large margins because AI assistants make up a significant portion of the company's workforce. Long-term profitability growth may be fueled by this as well as revenue growth brought about by innovation and overall demand. Therefore, NVIDIA's sales of goods and services to consumers make it a winner in this possible AI revolution, But the advantages for the company's financial performance don't end there. As a user of its own AI tools, NVIDIA is working to streamline, accelerate, and reduce costs in its operations. NVIDIA is a fascinating AI company to get now and keep onto for the long term as this explosive growth story develops, because all of this should also have a big impact on earnings growth in the future. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Let me ask you before I get to Meta then, since you brought up, the beneficiaries of the spend. What's going on with AMD? You own that.
Yeah.
That stock's having a terrible day. It's trying to play catch up, I think is fair to say. What's your own view for somebody who actually owns this stock?
Yeah, so the debate internally is AMD, if you weren't looking at the results from NVIDIA and others, is doing really quite well. It's growing nicely. The growth is reaccelerating. They upped their targets for their AI data center business. However, those expectations today are much lower than they were at the beginning of the year. And the expectations for next year are still lower than they were at the beginning of the year. In other words, AMD is expected to be a huge winner. Right now, it's a winner, but you've got other places that seem to be winning the battle there.
But I mean, as long as it's compared to NVIDIA in the near term,
right,
that's the potential problem moving forward, right? It's
right.
A problem until it's not.
Correct.
But I mean, the outlook, when do you have an idea that you really think that AMD can be a viable competitor to NVIDIA? Because that's what the market seems to only care about.
Well, one of the challenges that they have is NVIDIA itself is a tremendous competitor. So NVIDIA's next generation of chips is talking about leapfrogging again. And there's kind of a fear, like, frankly, AMD's seen it before long ago. Remember when it was a competitor to Intel but never really could gain market share? It lived in that sort of middle land for decades. So we'll see in the next year, I think, whether or not AMD can start to gain back share against NVIDIA. But for now, it remains sort of a second source supplier. Mm-hmm. And the fear is that NVIDIA, not only ramping up the technology, but improving supply, may sort of cap AMD's near-term opportunity.
NVIDIA's stock is undervalued. According to SoftBank CEO Masayoshi Son, despite the company's enormous market valuation and rise to the position of the second largest in the world. Son's optimism stems from his belief that artificial superintelligence, an AI system 10,000 times more potent than the human brain, could be realized by 2035. More than 200 million GPU processors and $9 trillion in capital expenditures by companies investing in artificial intelligence would be required to accomplish such a milestone, according to Son. At the Future Investment Initiative conference, Son stated, "I believe NVIDIA is undervalued because the future is much bigger." He predicted that over the next 10 years, AI spending will rise quickly, bolstering NVIDIA's chip business. Son explained that while though $9 trillion in spending might seem excessive, it might be a good deal considering the massive earnings artificial intelligence could generate. He estimated that such artificial intelligence could produce up to $4 trillion in profits annually if it were to replace even 5% of the global GDP during the next 10 years. CapEx is still fairly affordable, in my opinion. Perhaps too modest, but not too large, is $9 trillion, Son continued. Recently, SoftBank has put more of an emphasis on investments in artificial intelligence. The Japanese investment giant gave $500 million to OpenAI, one of the leading companies in AI research, as part of a funding round. In addition to its participation in AI initiatives, SoftBank has a 90% stake in ARM Holdings, which is set to launch its own AI processors the following year, solidifying SoftBank's position in the rapidly evolving sector. However, Son also voiced some reservations about his previous decisions about NVIDIA. SoftBank formerly owned 4.9% of the chipmaker, which it sold in 2019 for almost $4 billion. Since then, NVIDIA's stock price has soared, making that investment worth almost $160 billion. Earlier this year, Sun referred to Nvidia as the fish that got away and stated, "I had to sell the shares with tears in my eyes." Sun believes that if AI companies step up their attempts to achieve superintelligence, Nvidia, a significant player in the market, would benefit from the rise in AI spending. As always, sharing your thoughts and insights in the comments section can foster a more informed community discussion, helping everyone navigate the complexities of investing in this dynamic sector.